thanks for tuning into Talk ETFs, ETF.com's weekly video series. My name is Sumeet Roy, and I'm Senior Analyst here at ETF.com. Today, I'm speaking with Matthew Sigel, Head of Digital Assets Research at VanEck. So I'm curious, what are your initial thoughts on the recent launch of spot Bitcoin ETFs in the US? It looks like we've seen around $1 billion or a little over $1 billion come into these funds over the first couple of days. Is that a success in your eyes?
Yeah, we're really pleased with how all of these ETFs are trading right out of the gate. Strong volumes, tight spreads, small deviations to the net asset values. The early flows have likely been driven more by retail, but we do expect institutional investors to accelerate their purchases over the coming quarters as their asset allocation models, including Bitcoin, are released to the market.
That's great. And what are your thoughts on flows for spot Bitcoin ETFs long term, Matthew? I've heard all sorts of estimates ranging from tens of billions of dollars over the next 1 to 5 years, all the way up to hundreds of billions of dollars. What's your take?
So our early prediction was that these products collectively would see about $2 billion in flows over the course of the first week. So we're halfway there after 2 days or so. And then we have a medium-term target of $40 billion in inflows over 1 to 2 years. And we do that by benchmarking against the flows into the GLD ETF in 2004 and making some adjustments for the higher quantity of M2 and Bitcoin's kind of market share gains versus gold. So that would be 40 billion in flows, not including the price appreciation that we're expecting.
$40 billion, got it. And of course, one of the spot Bitcoin ETFs currently on the market is the VanEck Bitcoin Trust ticker symbol HODL, as we can see on your hat. It's seen roughly $10 million of inflows over its first 2 days. What do you think about that? Do you think that this ETF can, compete with the big boys like BlackRock and maybe even Fidelity?
We are definitely going to compete. HODL was one of the biggest launches that we've ever had in the history of VanEck in terms of trading volumes and retail orders. We've been involved in Bitcoin since 2017. We're not tourists in this space. We've engaged with Gemini as our custodian. The Gemini co-founders were actually the first to file for a Bitcoin ETF in 2013. It's a New York Department of Financial Services regulated qualified custodian. They were the custodian for the first North American Bitcoin ETFs in Canada. VanEck is also donating 5% of the profits from this ETF back to the Bitcoin community via an organization called Brink, which funds open source developers on the Bitcoin blockchain. The product has fair and transparent pricing at 25 basis points. We don't do these teaser rates that disappear after some number of months. And we've invested heavily in crypto and Bitcoin education. We have over 200 pieces of educational content and research on our website, fully staffed digital assets research team. We're managing numerous products in this space, not just the Bitcoin ETFs. So we've been able to engage with clients on the strength of our research.
What do you think is going to drive the flows for the various spot Bitcoin ETF products that are out there, Matthew? Is it everything you just mentioned? The low fees are going to win out. Obviously, VanEck has a pretty strong reputation in the ETF space as well. Does it come down to fees, name recognition, and marketing muscle?
In terms of the differentiation between the products, they're all relatively simple. Sorry, let me just say that again. In terms of the differentiation between these 11 ETFs, they're all relatively similar. We're looking to compete on the strength of our research, our relationships with some of the wirehouses that we think will be coming out with asset allocation models that include Bitcoin. And then, we've put significant capital off our own balance sheet to work in this product. So we seeded the ETF with $72 million. That's the largest seed of any of the ETF sponsors so far. And we're bullish on the coin, bullish. Bitcoin has been trading strong in part because of ETF optimism, but also in tandem with the sharply weaker dollar after the Fed signaled rate cuts possibly this quarter. You had the BRICS group expanding to include 5 additional countries, including Saudi Arabia and the UAE. We can observe Bitcoin penetration rising quickly in the Middle East, Latin America. So the market's taking cues from significant crypto policy support that's coming outside the US, where Bitcoin adoption is more apparent. And with, there's 50% of the world population that's voting in national presidential or legislative elections in 2024. That's an all-time high. So we see the prospect for more significant pro-crypto policies to emerge, like they did in Argentina following their national election in January.
Matthew, obviously, spot Bitcoin ETFs, they might be just the first of many crypto ETFs to come. A lot of people have been talked about spot Ether ETFs potentially launching next. Do you think that's a possibility anytime soon?
So I am limited somewhat on what we can say on that because VanEck has a spot Ethereum ETF filing that is live in front of the SEC. We're actually would be first in line on that application. It does seem as if the SEC has charted a path that allows them to draw the line potentially at spot Ethereum and Bitcoin products. But that hinges somewhat on the role that the futures markets can play. So right now, the CME only lists contracts for Bitcoin and Ethereum.
Well, Matthew, we're going to have to leave it there. Thanks so much for taking the time to share your insights with us.